Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, June 10th, Thursday, the last day of the Middle East Business Week. We're seeing oil markets open in Asia down, and obviously they're still at the very big numbers of close to $72. It'd be worth acknowledging as we kick off the webinar this morning that India recorded the unfortunate data point of the world record deaths in one day, over 6,000 people yesterday in India. So they sort of follow through of the terrible second, third wave in India is now sort of moving into the horrible number data point, which is condolences to everybody there. That's a big thing to handle. And that's probably totally underreported, given that it's generally acknowledged that data points are much lower than actually are. But oil price is down, and the other surprising news overnight is the data point out of the US. Fuel inventories rising while crude declining, but gasoline rising. Let's flip over to the other side of the world and pick up with Peter McGuire, CEO of XM Australia. Good morning, Peter. There's different data points around, Peter, that one might say, are we in a glass half empty week as compared to half full last week? The data point out of China that May oil imports were well down on earlier months in the year. That didn't seem to take too much steam out of this market.
Well, good morning, Sean. No, it certainly did. Another panelist. We're only 50 cents from what we've had as far as the high, I think, for the year. So, you got WTI at 69.50, got Brent at 71.70. So it's strongly bid up. We understand what the point is as far as demand. We understand US dollar index and the overall, I think, appetite from traders to be long crude. And it's been a great trade over the last couple of weeks. So there's been plenty of good money made, hedge funds and certainly retail. Probably a little bit further to go yet, Sean, maybe another $1 or $2 over the next week. I think there's got the capacity to take that out unless you see something dramatic happen with that US dollar, with G7 and so on. So that's where we're sitting at the moment. I think it could be over this summer driving season. I'm not going to say you'll hit a 75 handle for Brent, but I wouldn't be surprised to maybe that's the sort of headline that you'll be at by August.
On that point, Peter, is there anything there to stop it rather than what will get it there? Clearly, momentum is underway and has been in the last week since we broke through 70. Is there anything that you might just say, that might stop it getting to 75?
Yeah, I think a couple of points, Sean. What we're seeing in Australia as far as front page news in Murdoch Press, Fauci, so that seems to be a major concern as far as China and the virus. So if that was to really gain some traction, and it's really becoming quite hot here, I'm not sure what the news is where you are or the other panelists, but certainly that noise and that disruption.
Which noise? Sorry, I didn't catch that, Peter.
The noise on Fauci coming from a Chinese lab and those ramifications where as far as penalties imposed on China, if that starts to gain some major traction, Sean, that could derail everything. These markets are they're strong, but I tell you what, they're weak at the same time, and that could be one point. And the other one is those continuing vote counting that you're hearing from the Republicans. So that's what I'm hearing out here. Let's just wait and see what happens. You've got to have an eye on it, but you can't take it off.
Yeah, clearly. And there's also a minor outbreak again of COVID in China, which one has to keep acknowledging is a very unvaccinated country, at least percentage-wise. Peter, it's not often we see a headline these days that has the words China and the US agree. And we had one today. The commerce ministers from China and the US agreed to push forward trade and investment talks in their first telephone call since the Biden administration. Your thoughts on that and where that relationship may go now?
Well, naturally, Sean, it's a positive and that needs to be absorbed by the market. It's a show of good faith. Of course, we've only got to put our mind back, 7 or 8 months ago and the Trump administration and what their thoughts were as far as China and imposing all sorts of things as far as tariffs. So let's just hope that we see some a good news story develop from this. Naturally, both economies need each other due to these common circumstances with COVID. America seems to be reopening in a lot of ways. A lot of their states are performing very, very well, Florida, Texas, and even New York. So it seems to be a groundswell there of positiveness over this Northern Hemisphere summer. And from China's perspective, you made note of that earlier as far as a second wave or a new wave of COVID hitting the nation. So let's hope that they can sort that one out and it's positive moves up here. The markets are relatively strong. I mean, the only game in town from an economic standpoint, Sean, is equities. You can't, the commodity markets are too small, crypto's too wild and woolly, and the bond market, well, that's just a, you know, a giver of free money. So the situation at the moment is, if we don't see anything dramatic happen as far as taper, I think there's still another 2 to 3 months of good economic cycle to the upside for equities.
We're seeing even the India stock market has been relatively unperturbed by the dramatic events there of the last few months. How significant a factor is the weaker dollar and the outlook for the weaker dollar? Because of course, as we were saying earlier, these emerging markets are now carrying a fairly heavy burden of high commodity prices.
Well, that's it. I mean, I did something with CNBC the other day, and one of the anchors said, well, it's the first time we've had triple digits for gasoline costs or gasoline prices in India. So they're really feeling that in the wallet and the purse across all of the emerging markets, with high energy costs and really high commodity costs. Everything's, Sean. So everything's certainly been bid up, from copper to all the base metals, iron ore. You look at the foods and, you know, even stud lumber. So everything's had a very, very solid move to the upside. That in turn really is impacting consumption. Where does it go from here? I still believe that this decade is going to be a strong move for the commodity prices overall. I think that, with all of this stimulus that's been wound, we did see
the Chinese government attempt to try and suppress those commodity prices without too much success, obviously.
Well, no success at all, really. If you're looking at what we experienced with that $225 ton of iron ore on that Singapore, I think that was about a month ago, or maybe 3 weeks, then that was a very, very solid move and very high price. They really haven't had a lot of success, China, and I think the overall demand picture globally is going to remain very, very strong over this next decade.
Peter, as you started, the equity markets seem to be back hitting records again. Any reason to see that not continuing the rest of the week into next week?
I think, Sean, it's a recipe for a stock market party. The party's in full swing, man. Let's get the streamers out. This is going to be a strong, I think, June, July, unless something dramatic happens geopolitically. So, yeah, it's probably another 8 or 9 weeks of good growth over this Northern Hemisphere summer.
So this is not a year for sell in May and stay away?
I don't think so, Sean. I think there's still, the taper talks. Yeah, you're talking about Yellen's comments, bonds, and interest rate rising. Carol mentioned earlier, we've got those May numbers coming out for inflation, unless that scares the hell out of everyone. But overall, bonds, it's supporting the market. Taper, that's still, a number of months away. Let's see what happens in Cornwall tomorrow and Saturday. Maybe someone leaks something as far as taper or some concern to the G7. But at the moment, Sean, it's onward and upward for equities.
Even Larry Summers seems to have gone quiet for a few weeks. Perhaps he's lost the inflation fight. Thank you, everybody. We'll wrap it up there for this week. Peter in Australia, Ahmed in England, and Dr. Carol Nappe in Germany. Thank you for your time and insights this morning. Thank everybody else for joining us. We'll catch up with you next week, Sunday morning, where it's Week in Review with Christoph Ruhl. All the best.
Thank you.
Bye. Thank you very much.